Hello, and welcome to McQuilling TV. I'm Allison O'Melio, Marine Transport Specialist at McQuilling Services, and today we will be discussing our global oil demand outlook for the second half of the year and how it might impact the VLCC tanker segment. Global oil demand is poised to grow by about 1.4 million barrels per day for the full year as compared to year-ago levels, according to the latest outlook from the International Energy Agency. The third and fourth quarters of 2015 are expected to average about 94.7 million barrels per day of demand, pointing to a pickup in marine transportation requirements. At the same time, the higher demand projections will result in an increase on the implied call on OPEC, which we estimate to be around 30.7 million barrels per day in the second half of the year. Actual OPEC production will likely average about 31 million barrels per day, suggesting a tightening of the supply imbalance. Based on these projections, we would not be surprised to see the Brent benchmark touch $70 per barrel before the end of the year. Leading into the second half of the year, we note that Chinese crude imports in May showed a significant decline. The 5.5 million barrels per day of imports in the month were almost 2 million barrels per day lower than April's figures. Furthermore, we noted a significant decline of Saudi imports, with Chinese refiners preferring to a large degree more proximate Russian barrels. This development catapulted Russia as China's #1 source of crude imports, surpassing traditional leaders such as Angola and Saudi Arabia. While Saudi imports tend to be volatile, the recent run-up in Saudi OSPs for Asia have likely reduced the incentive for Chinese refiners to run Arab Light. Another potential cause of the decline in imports is that storage capacity in China is likely to be limited at this time. However, this should change in the second half of the year as about a 40 to 50 million barrel increase through the end of the year as part of China's defined SPR buildup is anticipated. Looking ahead, we expect that Chinese demand will average between 6.5 and 7 million barrels per day for the balance of 2015, with the potential for further increases in the fourth quarter a likely event. The combination of SPR buildup, which could add about 250,000 barrels per day of demand alone, and a seasonal uptick is likely to keep crude tankers busy. With demand expected to rebound and grow, the question will focus on the sourcing of barrels. The combination of higher Saudi OSPs and an expanding refining system in the Middle East may prompt Asian refiners to continue diversifying their streams to more closer origins, with Russia being one example as well as more distant load regions such as the Caribbean and East Coast South America, where fixture activity is about 7% higher year on year. As a result of this increased activity in the second half, we forecast the benchmark TD3 route will average about world scale 62 in the third quarter before firming to an average of world scale 73 in the final 3 months of the year. On the basis of $361 per metric ton bunker price, we anticipate that tanker owners will earn $60,000 per day in the third quarter and close to $75,000 per day in the fourth quarter. And that wraps up our global oil demand outlook. I'm Allison O'Melio. Thanks for watching McQuilling TV.